Welcome to the daily update, where I'll go over the action in the market for Friday, August 18th, and then we'll see how things look for Monday, August 21st. We're still negative overall. We had a little bit of a down day, but at the same time, we have to look at our charts and say, is some kind of a bottom starting to form? We're seeing a convergence of some different signals. Now, we have no evidence of that yet based on our chart showing that we're going back up. We've been going down, but let's look things over, and I'll give you a number of things to keep an eye on from Monday's session just to see if maybe we're seeing a bottoming process taking place. Before I get started looking at all the charts, please know that this is a take one video. I have to record things a little bit different now due to an arm injury. I'll probably do the same thing for the weekly video as well as the intermarket analysis video. I just have to do it that way for right now. It's a lot less painful, but I don't get a chance to cut out my flubs and when I get the words wrong or I have a pause. So again, I ask for your forgiveness in advance for that. I like to be able to edit the video. I want to put out the best video that I can. Well, right now, this is about as good as I can do. Also, keep in mind, I don't have the dates set yet, but I'm going to be offering an online course in September. It'll probably be either 3 hours if you do it in one day, or over 3 days, 1 hour each, if you decide to go about it that way. It'll probably be from 12 to 1 p.m. Eastern time, or the one session would be 12 to 3 Eastern time. I was going to do a Tuesday, Wednesday, Thursday, but I have an on again, off again commitment on Thursdays that I haven't heard about yet. So I may go to Monday, Tuesday, Wednesday. And if I don't hear anything by the end of this weekend, I'm just going to go ahead and set the dates for that. I will be covering my approach to technical analysis. It's a little bit different than maybe what you've heard before. I'll be going through some basic strategies that you can implement, and I'll also be talking about support and resistance. All right, let's go back and talk about what happened. China came out with a report saying that Evergrande, if you've heard of them, Evergrande, I'm not quite sure how to pronounce that. That's a big property owner in China. Well, they filed for Chapter 15 bankruptcy protection in the US. Apparently, that's like double the strength of a Chapter 7. I don't know the different chapters, but that has been something that we kind of been watching for a while now. We'll have to see if that bleeds over and has an impact on the US economy. The current scenario that the market is going with tends to be more negative right now, where a week or so ago, well, really up until the end of July, we were going more with the positive scenario. Now it's a little bit more pessimistic. The idea is that the economy is stronger than expected and that the Fed will keep rates higher for longer. We've known that. The thing that's really changing this more negative is the stronger than expected economic reports are coming out. Is the stronger economic reports that are coming out. And they may have to raise rates even further if we keep seeing strong economic reports, and that can really weigh on the market. On a short-term basis, our list is a little bit shorter. We still have the 20-period exponential moving average that's giving us an extreme negative reading. You could also suggest that's oversold. The Stochc RSI, the Williams percent R, the CCI 14 and 20, the stochastics, the force index, and the RSI based on 9 periods. In the intermediate term, the NYSE did drop off of this list, but we still have the S&P 500 McClellan oscillator that's looking extreme. A new addition to the list is the CMB composite and the PMO studies. The dollar was down and interest rates were down, and that could have given some support to stocks. It was options expiration on Friday. We didn't really see a major pickup in volume like we usually do, but stocks just are not ready to go higher, at least yet. All of the yield curves that we follow remain inverted. We're keeping an eye on those to see when they go back to being regular. That's when we start looking to see when is a recession going to happen, if one even happens. Sentiment is still neutral. We ticked down to 45 where we had been at 46. Our trend, we're starting to show a trend in the short term now. Unfortunately, or fortunately, depending on your viewpoint on things, the red line is still on top, so we would default to the negative trend, but it's starting to cross back above the moving average. The intermediate term chart is not there yet, and I'll show you both of those. We are seeing a weakening trend with the intermediate term ADX, which is what we use as a trend indicator. And that still has not dropped below 20, even though it's turning back up slightly. Our bias is negative and our momentum continues to be negative. The economic reports, we didn't get any on Friday, and there's not going to be any for Monday either. Here's the intraday chart where we gapped lower. And it was kind of interesting. On Wednesday and Thursday, we actually gapped a little bit higher and then went lower, gapped higher, then went lower. There was this thought in my mind as we were gapping lower. I thought maybe we have a chance of going up from here. And we did. We showed some improvement as the day went on, but we never really did all that much to really break above the daily pivot. That seems to be more shorter term overhead resistance. Looking at growth versus value, where it did tick down just a little bit, but it's been doing okay lately. We're seeing this going up sometimes on down days. That could mean that the smart money is coming in and buying growth stocks on weakness with the anticipation that they're going to go up later. Also, looking at the VIX, where it ticked down just a little bit in Friday's session based on the line chart and the bar chart because we had a slight up day. The VIX of the VIX is also showing that volatility really came down in Friday's session. It was a real yawner. It wasn't as comatose as last Friday's session, but it was still not all that exciting, especially for an options expiration day. This is one thing that we're keeping an eye on. We're negative because this 5-period simple moving average of the equity put call ratio is going up. So that's the negative part, but we're getting to an extreme reading now. And when we hit a high level, which we're not quite sure where that's going to be yet, and then start to come back down, sometimes that will mark a bottom in the market. I've tried to mark other times when we hit a bottom, and that will often mark a top, where there are other times when we hit a top. And you can see back in late 2021, where we were going sideways for quite a while, we hit a real top in this ratio and then saw a nice little run up after that. We're wondering if something like that is going to happen again this time. Then looking at a ratio between the VIX and then the volatility of the VIX ratio, where this has been declining overall, which tends to be positive for the market, but we are flattening out and possibly turning up with this ratio. We want to keep an eye on this. If it starts to go back up longer term, that could be negative for the market. If it starts to turn and go back down, that would be more positive for the market. Also, longer term, we have been declining with our 253-period simple moving average of the equity put call ratio, and that's been positive for the market. That started in about the middle part of 2023, going back to the earlier part of the year. Well, we're starting to go back up now, and we're keeping an eye on this. Is it going to continue to go up, or is it going to turn and come back down? If it keeps going up, that would be negative. If it turns and starts to come down, that would be positive. We're also seeing the ratio between risk on and risk off really taking a hit these days. It had been in a nice solid uptrend when the market was going up. It's starting to pull back now as the market has been under pressure. We'll want to keep an eye on this. This means are folks favoring stocks over bonds? When it's going up, they're favoring stocks. When this is going down, they're favoring bonds. Accumulation distribution showed a little bit of improvement on Friday. It turned up, but it's still below a now declining moving average. This tries to measure what is the smart money doing. And right now it showed a little bit of improvement, but we're not seeing an awful lot of conviction. Here's the condition of our trend, the intermediate term chart, where we're turning back up, but we're not above the moving average yet. The red line is on top, so we would default to the negative side of things, where the green line is declining. Now, in the short term, we are crossing above the moving average. We're still below 20, but this is suggesting that a new trend is developing. Even though we've been going down, right now we would still default to the negative trend because the red line is on top. Here's the daily chart, and we're wondering, Is this part of this have we formed a bottom puzzle here, where we came down almost to the previous high and we were able to bounce up off of that? That could be positive for the market. On the bottom, even though volume picked up a little bit, it is still well below average, especially for an options expiration day. We're watching the slope. This is our shorter term oscillator that we follow, and it is negative. You can't deny that, but we're starting to get down into this extreme negative territory where sometimes we hit a bottom. There's no proof that we're turning up yet, but we're just keeping an eye on this one. Looking at the 20-period exponential moving average, it ticked up, but it's still extreme negative. We're still declining with the 50 and the 200-period moving averages. Looking at our moving average tree, we're not quite down to the 100-period moving average yet. This would be the exponential moving average for the 100 period, but this may provide some support, and we might get a little bit of a bounce off of that if we continue to fall. Or are we starting to form some kind of a bottom already? This is a pretty positive looking bar where we opened at the low and then closed near the high and showed improvement throughout the day. But please keep in mind, it's dangerous to try to front run this because we're just seeing this start to form. We could easily turn and go back down next week. Also, looking at the standard deviations chart, we had become a little extreme where we got down to the third standard deviation. We're right on the border now between the second and third standard deviation, so it's not as extreme as it was. The S&P 500 McClellan oscillator is showing a little bit of improvement, but it's still extreme negative. Sometimes this can also suggest a bottom, and other times when we got about to this level, that did mark a bottom for the S&P. The chicken money flow still negative, but showing some improvement. The red line, which is the moving average, is starting to turn back up slightly. This is another measure of what is the smart money doing. We want to see this show more improvement to get things back over to a more positive stance. Looking at the RSI 14, we're still declining with that. We're starting to get more extreme negative with the RSI 9. We're wondering, are we going to bottom in a short-term time frame and then start to come back up from here? Also looking at our PMO study, we're turning back up a little bit with the PMOs that are rising. We're still extreme negative with the buy signals, and we continue to decline with the PMOs that are above zero. The Ichimoku cloud, sometimes when we're going up and come back down, this may provide some kind of support. We're well into the cloud right now, so this could also come together to form some kind of a bottoming process. The CMB composite is starting to get extreme negative and has not turned back up yet. So this is suggesting that we're oversold. You could use this as a short-term indicator. I use this more like an oscillator, and I tend to use it more in the intermediate term. We have seen something a little more negative here with the point and figure chart. There's a new zero that was drawn in after Friday's session. There's no signal that's been generated here, but the fact that there's another zero is slightly negative. We're also watching this longer term. This is a weekly chart of the S&P. Down below is the MACD. It's starting to roll over and could be giving a longer term sell signal. But when we look at the growth to value ratio for the S&P, it's still showing some improvement here. We've been going sideways to slightly declining more in the short term. We're in a longer term uptrend, but we want to see more follow through with this before we really get convinced that growth is outperforming value with a lot of conviction. We're also bringing up our short-term fib charts. We didn't get quite down to this level again, the 100% retracement. That's at about 43.25. We hit a low at 43.35 in Friday's session, but this might be close enough to suggest that this might be providing some kind of support. Okay, let me try that again. This is getting close enough where there might be some short-term support being provided according to our Fibonacci levels. Then longer term, we're also still above this 43.13 level, but we're getting close to it. If we come down a little bit more, will this level provide support, or are we starting to see some improvement already? Looking at the Dow, it came down to this S1 level after coming below its 50-period moving average. So this support continues to hold. with the support level, but it's negative, the fact that we dropped below the 50-period moving average. We're also keeping an eye on the NASDAQ 100. The PPO continues to decline. We're well below zero now, wondering, are we going to form some kind of a bottom? Back in March, we did form a bottom right around the zero level. Then in late 2021, early 2023, right before we saw a really nice run up in the NASDAQ 100, this did bottom at an even lower level than we're at right now. Looking at the NASDAQ, we came down below this S2 level, but we closed above it. So far, this support level is holding. Then looking at the NASDAQ fib levels, where we came almost down to this 13,152 level and then showed some improvement as the day went on. Is a bottom starting to form? Looking at the NASDAQ 100, the support level S2 here, this did hold up as support, and we showed some improvement as the day went on. Then the NASDAQ 100, we're not down to the 61.8% retracement level yet. If we continue to fall, we'll see if this does provide support. The small caps, after getting below their 200-period moving average, were able to close just a little bit above that in Friday's session. Then looking at the Russell 2000, which also measures small caps, we're looking extreme negative with the RSI. The MACD continues to be negative and dropping below zero, but so far on this index, the 200-day moving average has held as support. The mid caps never did come down to their 200-day moving average. They're still below this S1 level, but did see a nice little bounce in Friday's session. The yields, after going up for most of the week, they actually fell in Friday's session. That gave some support to stocks. Longer term with the weekly chart, the PPO is starting to show a little bit of weakness long term. We're seeing some weakness intermediate term, and we've dropped below zero in the short term. Then another weekly chart of the S&P where we still continue to be below this resistance line. This is much longer term. This is a trend line going back to 2018 and 2020, right before the COVID plunge. But if you were to extend this trend line all the way back to its beginning, it starts at the 1987 crash. So this is a very long-term trend line. The NASDAQ 100 weekly chart, we're also below this resistance level. We're wondering, has this signaled that we're forming a top right now? Then much longer term as well, we look at a weekly chart of the NASDAQ 100 to the Dow ratio. We came up to a really high level back in 2000, right before the dot-com bust. We finally worked our way back up. We hit this top again in late 2021, right before a very difficult 2022, and we saw this decline. We've been coming back up. We never got up to this previous level. We're wondering if things improve, if we will go back up to this level, or since we're declining with this ratio, is this signaling that we are at a long-term top? Tom Bowley has his research that he posts where August is the third worst calendar month of the year, where energy tends to not be very good, even though it had a good week, and tech tends to be really hot, where it's not been doing very well lately. We're still in the middle part of August, coming into the later part now, where we typically see some kind of a bounce and then some weakness going into the latter part of the month. Also, from the period of May through August, we tend to see growth outperforming value. That's the buy low, sell high that we want to be able to participate in. We're just not seeing that. Growth is still in an uptrend compared to value, but we're not seeing a lot of conviction with that, at least yet. So what's our outlook for Monday? There will still be earnings reports that will be released. The technicals are negative and we're still oversold. And we just have to ask this question. We're not seeing any confirmation in the charts yet, other than we're seeing a convergence of some things coming together on different indexes as well as in the S&P to at least ask the question, is a bottom forming? We won't get any economic reports on Monday. We're still watching all the geopolitical events. Inflation, interest rates, and growth concerns are what the market is really fixated on for right now. Here's the new calendar for the economic reports that will be released. Let's see, any big ones? We'll get a lot of real estate data in the upcoming week. And then on Friday, this is when Fed Chair Powell will give a speech at Jackson Hole. This is when the market was doing really well a year ago. And they thought, oh, the Fed's going to be done raising rates and everything's wonderful. And we're just going to buy, buy, buy. Well, he came out and gave a speech and totally rained on that parade. And we started to really go down after that. In fact, that's when we set the August 2022 high. And then the rest of the year ended up being very challenging. We'll have to see. Is the speech that he's going to give this Friday, is the same kind of thing going to happen? Or is it going to be more supportive of prices going higher? Or is it going to be irrelevant? Looking at the Stock Traders Almanac statistics for Monday, August 21st, we're pretty negative historically. The Dow is only up 28.6% of the time. We're neutral to negative with the S&P, and we're more just flat negative with the NASDAQ. So these are not good historical statistics. But at the same time, we've been watching the historical statistics suggesting that we should be going up right now, and we've been going down. So maybe we're just delaying things a bit. Here are some of those historical statistics. When we look at the presidential cycle and we're in the pre-election year, we should see some kind of a bounce going forward from here. We just haven't seen that yet. Also, when we look at the NASDAQ, usually in the early part of August is when it bottoms and then bounces back up. Hasn't happened yet. When we look at the S&P during a pre-election year, we follow the green line. Historically, it has gone up, but we're just not seeing that yet. It should be the 15th trading day of the month. And I'm sorry about that. I didn't change this over. We're on day number 15 now. But when we look at the next chart, we're beyond this window when we typically see a bounce. And now historically, this is when we see some weakness. Are we going to go against what has historically happened and maybe see a bounce out of this? Or are we going to see more follow through weakness? So our scenarios, we're still going with the down one right now. We just have to ask this question about a bottom forming right now. We have no confirmation of that with our charts. We are negative and we're still oversold. We can't go with the up one yet unless you're like super risky on the edge, want to live on the edge of life here. We could still go a bit with the sideways trend, but it looks like in the short term, we're starting to go above the moving average and a new trend could be developing. And for right now, we would default to negative because the red line is on top. Our warning signs. The mess that we've been seeing since the latter part of July into August, this was a convergence of some short-term bearish signals, and that has been playing out. We're wondering, are we getting close to that being finished? Is there still more to go? We see some signs that we could be forming a bottom, but we're not seeing any confirmation yet. How many times do I have to say that? My goodness. The longer term trend signals, the weekly S&P 500 chart and the NASDAQ 100 chart, we're coming down from those resistance levels, and that might be signaling a longer term top. Seasonally and historically, August is a weak month, but we're supposed to be coming into a positive time. That has not materialized, at least yet. The S&P 500 oscillators are negative. The NASDAQ 100 oscillator that I showed you, that continues to be negative and really shows no signs of bottoming, at least yet. The VIX, even though it ticked down in Friday's session, it's still continuing to climb, showing that more fear is coming back into the market. The equity put call ratio is going above that line. We're waiting to see when that will top out and start to come down. That might be another thing to watch for a potential bottom. The S&P 500, the NASDAQ 100, as well as the Dow and the small caps and the mid caps, they're all below their 50-period moving averages. The cumulative new highs, new lows for the NASDAQ are still showing weakness. Even though we were down a little bit in Friday's session, the 3-month yield is still above where it was back in 2007. We're waiting to see if there's a meaningful turn down in that yield, because that signaled a problem back in 2007, right before the great financial crisis. We're wondering, is that going to give us a signal again this time? Growth is showing some weakness in the more short to intermediate term, even though the last few days have been more positive. But longer term, it's still in an overall uptrend. The parabolic SAR daily and weekly charts continue to be negative. The vortex is negative, and we're still dealing with earnings season. On the positive side, way in the background, in one of our seasonality charts may be coming into question. It's the ZWAG NYSE breadth thrust. That's actually dropped negative again. I'll be going over that in the weekly video. But we have other charts that are still looking more positive, that are much more longer term. The daily special K chart is positive, where the weekly chart is negative. The equity put call ratio going back 253 periods, it's still declining overall, but it's starting to turn up. We're keeping an eye on that. The S&P is still above the downtrend channel upper line. I still haven't been showing that chart because we're still far away from that line. The risk on posture still favors stocks over bonds, but we're seeing more of a short-term decline, suggesting that people are not as favorable as being in stocks over bonds. The S&P is outperforming utilities, and the staples to S&P 500 ratio is declining. These two together usually give support to the S&P, but we're not seeing that yet. The Russell and the small caps, as well as the mid caps, have generated recent golden crosses. That's positive, even though we're seeing some shorter term weakness. Small and mid cap growth continues to be positive. The financial sector, even though it's been getting hit pretty hard, generated a recent golden cross. And then we have to ask this question: is there a convergence coming together of these different bottom signals or potential bottom signals that are starting to form? We're going to have to see this play out a bit before we can have any conviction to answer that question. So our conclusion, we're still going down. We're still negative and we're becoming oversold, but we ask, are we forming a bottom? In the short term, we're negative and continue to be oversold. We're also negative in the intermediate term and having a lot of oversold indications, where we're still positive in the long term. Thank you. Thank you for putting up with this and doing things in a way that I'm really used to doing it a much different way than right now. I will be recording the weekly video and intermarket analysis video. I'm going to do all those take one as well. So I don't know. I seem to get people that aren't really complaining about the video. So maybe you like it better this way. It's more improv type of an approach. Have a really great weekend, and I will talk to you in the next video.